It's back from Alpha Charts with a state of the market video. Today is September 17th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you haven't checked out yet on Twitter, become a super follow, Alpha Charts 365. Even if you don't, check me out anyway over there because I post all kinds of things all week long, and I think it's worth it. All right, let's go. SPX. Friday was a big gap down day. Yes, there was some buying, on the day, but it was still a down 0.72 on the S&P. And more importantly, looking at the weekly chart, you have this bearish outside bar, bearish engulfing. That tells you more volatility is coming. Good chance, I think, that we get close to this bottom. We may not hit it. We could go short of it. We could exceed it. But this looks like the next level. Maybe you could say here, right? So you say, maybe right here, another 3.5%. And then if it exceeds that, then it goes all the way to 6%. That's possible. But definitely down is the most likely scenario here. Underneath all of its moving averages, and now you have the 50-day starting to flatten back out, and soon it's going to be turning lower as well. And then you have everything in bearish alignment again, and that's coming very, very soon. So maybe choppy, but I think this area and then this area is likely. I just deleted that line. Didn't mean to. We'll put it back later. But that's what I'm thinking right there. So looking at the RSP, the RSP was down actually more than SPX. So it tells you that the selling was very broad based, and it fell. It's right through this area too. You say it's right at the area, but I would expect it to come down. Also, this VWAP from the COVID lows is this purple line right here, and I think that is an important level. And price is now below that as well. Lots of distribution going on there. So yeah, things are not looking good. Again, it was quad witching on Friday and rebalancing, I believe, ETF rebalancing. So that's why the high volume potentially, but still not a good look on the equal weight, and worse than the equal weight. All right, on the Qs. So there's this nice little trend line right here that I was watching, and it broke it, and now it's coming down. So I think this is very likely scenario is this 270-ish area, sure. But the bigger scenario, again, we're gonna go to the weekly chart in a second, is at 17. And you see here, let me just go back a little bit more because it's got to go way back, right? Here we go. 2010 trend line, big deal. It's held multiple times, right? And now we'll go back to the daily. We'll zoom in. Get rid of these arrows because they don't line up anymore. And you can see how this area is kind of important. Now, if this breaks, I think there's a great chance that we come back into that trend line again, or even in this area. So another 15, 16%, maybe a little bit more potentially. And that's a big deal. That's a big, big, big drop. So right now, again, 50 days starting to flatten out. Soon, it's going to be turning lower. And yeah, I mean, it's hard to make a bullish statement from this, you know what I'm saying? At least to this level and potentially even lower. So let's see, this was 0.61 equal weighted. Again, a little bit worse, right? A little bit worse. And when we look at here's your next level down here for it. So they kind of, line up. And let's just wondering here. Yeah, this right here, 24%. Just wondering. 30%. Oof. It's like 23%. I mean, just huge drops. So this one has, again, not looking good at all. All right, IWM. Still in the quote unquote area. Send this slide a little bit. That I've been watching, but I mean, this drop is just nasty. It was down 1.45%. So again, leading to the downside. Then another 5-6% to this retest-ish area. But let's go to weekly. Again, you see the weekly bearish engulfing. And this area is the next, I think, big potential support below it. And let's see if it runs in the same. 28, we'll call it 25 to 28%, somewhere in this area. That's a big drop, right? If we do another leg down, that's a big drop. With this 5-wave move, then we had a retrace. Still a lower high though. I mean, you see the lower highs very distinctly on this chart, and the lower lows. That's just a downtrend, right? Go back to the daily. These are 200-day. It's still declining. Everything is declining. 50-day isn't flattening yet, but it will soon. So again, nothing good to see here. And IWO, same situation. A breakdown here has another 10% or so to retest the lows, and almost 30% to the next major area. Doesn't mean it's going to go all the way down 30%, but it could. And so that's what would be. Where's the risk? The risk is immediately 10%, right? Right in this area. 200, we'll call it the 200 level, right? Nice psychological number. And then potentially this 160-ish. Again, it's huge. So these are gigantic numbers. And if it does hold, it's a 50% move, right? That's a big move from top to bottom. All right, moving on. Mid caps. We were hoping for an inverse head and shoulders. It looks like it's not going to happen on any of the charts. So we'll just take out the hopium. Hopium is removed. And coming down to this area, they may, mid caps could potentially hold up better, and they kind of have been, than some of the other indexes. So we'll keep watching that. All right, moving on. ETFs. Major area here, right? This is the major area. We've talked about it every week because it's so important. 2007 highs, 2018, 2020, and now it retested in 2022. And now is it making head and shoulders? I'm going to take this out because I don't think it is at this point. So if this area breaks, we'll call it $31 on the XLF. That's when I feel like, potentially worst case scenario is in play. Right? There's a weekly chart right now, and things are just looking, really bad on there. But 31, even 30, we'll call it, is holding. If pricing retest, fine. If it breaks through, that's a major problem with the financials breaking this area. So definitely one to watch. SMH. Again, this was what I was hoping for, right? Ain't happening. I'm always going to lean towards the bullish side just because, I'm an optimist, right? I want things to go up. And the market most of the time does go up, but not in this scenario. So it's kind of leading to the downside, and 25%, right? It's kind of what we've been watching. Looking on the weekly, because I think weekly shows it best in these scenarios. That's where this level came in. And again, you have the bearish engulfing right there. And things are looking pretty nasty. SMH leaning to the downside, not good. And let's look at XTN. transports. This was FedEx is a big component, even though remember this is equal weighted. I chose XTN because it is equal weighted, and I didn't want one stock to overpower it. But even with that, all the transports got hit. And this obviously never held up because of Friday. So going to a weekly chart, big time bearish engulfing. 2018, 2018, 2020. This held up in 2022 recently. It looks like it's going to break. Not good if transfers are breaking down. That's negative on the market all around. Home builders, I guess, would be looking pretty bad too. And they are. Again, this was super important level. This is from the creation of the index in 2006. Here is 2018, 2020. And do we come back and retest it? Well, let's see. 18% to the downside right here. And top to bottom, roughly, I just like to see top to bottom. That's exactly. Yeah, be 45, 50% to downside from top to bottom. Yeah, that's a big deal. And I think that home builders, again, underneath all their moving averages, 50 days starting to flatten out, doesn't look good. Looking at the, actually switch here. Let's take all these off right now. All right. Oh, I have 50 days. So. All right, let's look at the VIX. So the VIX hasn't spiked up. That's the weird part, right? And maybe it will. It's right at the edge, but it hasn't spiked. That's odd. Yeah, I mean that's weird. Let's see the bond yields. Again, bond yields haven't really had that big spiky move. Again, we want, if things are really falling apart, you'd expect them to be widening like crazy, but they're not. Okay, I mean, not yet at least. But that's weird, right? I would expect the internals to be showing what the charts are showing. And right now, VIX, and even bond yields, I mean, they're rising. There's no doubt, but they're not. You know what? And maybe because we're not in that panic mode. This is panic right here, and that could be the reason why. Now, this isn't panic. This is just a nasty, rough market, right? Just a nasty, rough market that's going to be choppy and moving higher through a chop type phase and not a spiky type phase. Very, very possible. But call ratio sentiment is starting to get to that bearish level. So we're moving to extreme, not quite there yet, but that's encouraging to see. And let's see what else. MMFI. As expected, breadth is decreasing pretty quickly. That's an ugly look right there. And then let's look at Bitcoin real fast. Bitcoin can't get anything going at this point. It was starting to look good, and then just took a 10% drop. So yeah, so that's not a good sign either. All right, overall, market's bad, right? I think cash is the position right now, or shorting if you got in, great. If not, if it bounces on Monday or something like that, it may give you another chance to short lower, at least this 270-ish level, 271 on that Qs, another 5-6%. Looks very, very possible. And maybe even if that breaks, much, much more. All right, so be careful out there. Save your mental capital, save your physical capital, and take care. All right, hope you all have a great week. Thank you. Bye.